Good morning, traders. It is Monday, October 20th. Hopefully everyone had a great weekend. Looking at the charts, equities are still digesting, trying to figure out what's going on. When we look at the 30-minute chart, you can see we've gone into oversold territory a couple of times over the past few sessions, and the bars here are mixed, going from orange to green to red. And obviously we can see that we're stuck inside this one great big red bar right here. These are inside days. Generally, they're seen as a bearish chart pattern. Usually it's going to resolve to the downside and break down. But again, just have to let the charts do what they're going to do. The markets are neutral. They're trendless. We don't want to take part right now. Obviously, there's a lot going on. Just look at the volume. It just goes to show there's a lot going on. A lot of emotions, a lot of FOMO, a lot of people rotating in and out right here. A lot of emotions kind of running high and a lot of news. So if we look where money has been flowing or is flowing, we can take a look over at bonds. They have been acting as a safe haven. They have been moving slightly higher and to the upside. We have been also seeing gold. Well, actually, let's go to utilities first. It's one of the top performing out of the 11 core sectors. It's the top performing sector. A little bit of a reversal there over the past couple sessions, but it has just been muscling its way higher. We've been talking about this as a defensive play. Now it is outperforming the stock market, and usually the stock market is going to have some type of trend break and some type of reset, and that's exactly what happened. This was leading up into it, telling us get ready for the stock market to have that, and then of course we ended up seeing the stock market have a crack to the downside, and now it's trying to figure out what it is going to do. Is it going to break down, or is it going to base out a little longer like over here and then potentially want to start running higher? We'll just have to find out to see what unfolds. Now we do have the dollar up a little bit this morning. Again, it's trying to work itself higher. It's had a pretty nice move to the upside. It's pulling back to a cluster of moving averages, also into support into the middle of this range. When we look at the 30-minute chart, you can see it has pulled back and it's got a little bit oversold. It's at the 20-day moving average, which is this pink 20-day moving average on the daily chart as well. And so we'll see if it gets some traction there. Now today, well, I guess last week we saw gold have a little bit of an overbought kind of pullback and reversal. It just showed how quickly people jump ship. When it starts to roll over, the momentum traders have very tight stops, and of course it starts to trigger them, and then it'll trigger a lot more fear and people will dump gold. And of course it had a quick little high volatility pullback and reset, and we talked about how expect gold, silver, miners, and platinum and palladium, the whole space to start to get very volatile. Big pops to the upside and gaps and big reversals back and forth. That is kind of what's going to continue to amplify. We had one right over here a couple weeks ago. We had another one. Overall, the price is still holding up. It is still above the 5-day. It really just had a little bit of a shake up and shake out, and it could very easily pop and continue to run higher at this point. But it is showing that signs of increased volatility, and it's coming to life today. Gold is up 2.37%. Which surprisingly, this from the high of Friday to the low was almost 5% to the downside. That is a huge move for gold. So it's just showing how volatility in this once slow moving kind of defensive sector or asset here is now showing increased volatility. Now, if we take a look over at silver, it's up about 2% this morning as well. Of course, it took a big haircut on Friday, and it's licking its wounds and trying to stabilize and move a bit higher. Again, they're all still in a strong uptrend, and they're just having a bout of selling at this point. If we look at gold miners like GDX, they had a big pullback, but they are trading higher in pre-market, somewhere up around 80.20, so somewhere way up here. So they are recouping and rebalancing. If we take a look over at Bitcoin, it is up over 4%. Again, getting very oversold. It's dipped down to the 150-day moving average, flushed out on Friday, having a bit of a bounce. Again, the trend and the momentum really, it went from oversold to neutral to a downtrend, and it's trying to figure out what it's going to do. It's going to have a big gap up around 111, somewhere right up into this area here. So we'll see how that unfolds. But again, really volatile, has a broadening formation. I'm never a fan of a broadening formation, meaning it has a series of higher highs. It has a series of lower lows. It is like a megaphone. Volatility, each wave gets bigger and bigger, and it's just more dangerous and more uncertain. Is it going to create another lower low and then rally up and make a higher high. It just has a ton of risk and a very low probability of knowing what it's going to do. Now, if we take a quick look at palladium, we looked at platinum and palladium and all of that stuff not too long ago. We talked about how it had a measured move. If we just grab the Fibonacci, we can go from this last run where it had this big run up and we had this low. You can see we pretty much have come up and hit that level. When we zoom back on this chart, you can see we had the run up. It had this pullback. We talked about how it has the 618 and then the 100%. And so it doesn't always mean it's going to reverse right there. You can usually have a blow off phase and then it can correct and come back down. And that's kind of what it's done. And so that's kind of, it's trying to shake things up. Definitely a little bit of a reset here. I mentioned this last week, but it looks like we're very close to some big volatility and potentially the precious metals space getting closer and closer to putting in a significant top. Now, this type of volatility can rebound very, very quickly in this market. We could easily see this pullback. We could see it spike and make a higher one and come back down and keep it make another higher one, and it could still blow off and have a big surge to the upside. This is just the first real sharp bout of selling that we have really seen in gold, silver, platinum, and palladium, just showing that it's getting a little bit more mature in its bubble phase, a little more unstable. When we step back and look at the big trends of the market, we look at the weekly chart of the TTI, the technical investor strategy, telling when we're in a bullish environment, bearish, or a protective phase. Obviously, we had the 2022 bear market phase. We recently had it go into a protection phase and it's kicked back into a bull market. So from a longer term standpoint, we are still in a bull market. Now, I wouldn't say it's a very strong bull market, but it's still prices going up and you still have to continue to take advantage of that. And right now, on our shorter term strategy, we have moved to cash. When we look at our strategy like the NASDAQ and we look at the sentiment here, we've been talking about how the market made higher highs while this market internal, the strength of the market was weakening, and then we went into a big sell-off earlier this year. We have the same thing happening right here. Market was pushing to all-time highs, even though the market was weakening underneath, and now it's trying to figure out what it is going to do. Are we going to go off a cliff and have another sell-off, or is it going to stabilize and want to push higher? Again, we don't know, but when it is in this phase, we step aside, protect our capital. We can always get back in. There's always another trade. There's always another trend coming, but we don't need to hold and ride out all of the volatility when the markets are telling us, hey, protect your capital because there is no real direction. And so that's kind of what we focus on. If we take a look at the Magnificent Seven, we can see here on the 30-minute chart that it's dipped down into these oversold territories a few times. It's rebounded, but now we have orange bars. It's kind of trying to figure out what it is going to do. When we take a look at the daily chart, again, it looks very similar to the indices themselves, like the S&P 500. This could be seen as a bear flag, and it could point to a big drop, which if this does break down, we're going to see the indices have a pretty big pullback as well. We're seeing some internet shortage with cloud, with Amazon this morning. I'm surprised it's not affecting the stock. Really, the stock is actually trading positive this morning, even though they've got a big outage on the internet. But overall, again, it doesn't seem to be affecting much. Last but not least, let's take a look at the dividend space. If we look at the S&P 500 high dividend stocks, so those holding big blue chips, really it hasn't been performing very well. We continue to see them underperform. It moves down. It has what looks to be a potential another bear flag that it might want to pick up speed to the downside. If the overall stock market does start to sell off. And if we zoom back, you can see it's not a very bullish chart. We have more so the market kind of was running here, had a bit of a blow off, and then it fell out of sync. And then it put in this big bearish pattern, more or less kind of rolling over. It had a series of moves to the downside. You could argue this is kind of a little bit of a bear flag. And then the bottom collapsed here earlier this year with the tariffs. And now it's going to bounce back up and it's kind of rolling over. It's gone from a series of higher highs to, you could say head and shoulders formation where you've got a shoulder, or potentially you come across here. Maybe this is going to be a bigger shoulder. And then, of course, it could break down. So a lot of charts are showing that a lot of pain is just around the corner potentially. And it might be a very precipitous fall, which is why we are in cash and why we need to be protective during certain phases. And of course, this is going to hurt majority of investors because most people are diversified. Most people hold a ton of blue chips because they go for dividends, not realizing that dividend stocks fall more percentage-wise than the stock indices themselves during a major crash, because all the retirees with all their money get scared and they protect their portfolio by exiting everything that's losing. And so they're all selling the same blue chips at the same time. That's why we get these very sharp drops. They're all on the same wavelength in terms of watching their accounts very closely. And that when everybody does the same trade at the same time, even though it could be a rock solid company, it pays big dividends, they get hit very, very hard. It becomes a crowded play. Run for the door at the same time, and that could happen again. It will happen again when we do have another market reset and a big leg to the downside. Anyways, that's it for now. We'll talk to you soon. Bye-bye.